All right, let's dive into something that can feel, a little intimidating for a lot of people: financial statements. If you've ever cracked open a company's annual report and your eyes just kind of glazed over, trust me, you are not alone. It can feel like you're trying to decipher some ancient secret code. But here's the good news. Today, we're going to break it all down. We are going to crack that code.
So you've probably heard this a million times, right? That financial statements are basically just a report card for a business. They get an A for profit, maybe a C- for debt. And yeah, on some level, that's kind of true. It gives you a grade, it tells you if they're passing or failing. But honestly, thinking of it that way is a little boring.
So what if we just ditch that report card idea entirely? What if we look at these documents as something way more exciting? Like, what if they're actually a detective story? Think about it. Every number is a clue, every statement is a witness interview, and there's a real story hiding in there about what's truly going on. And for the next few minutes, you and we're going to be the detectives on the case.
Okay, so every good detective needs their case files, right? This is our briefing. Before we hit the streets and start investigating, we need to know what we're looking for, what evidence we have to work with. And in the world of financial investigation, pretty much everything you need to solve the case is in 3 key files. We'll call them the big 3.
First up, you've got the balance sheet. I want you to think of this as a single, perfect snapshot of the crime scene. It freezes one moment in time and shows us exactly where everything and everyone was. Then there's the income statement. If the balance sheet is a photo, this is the security camera footage. It shows us the action, the sequence of events over a period of time. And last, but oh boy is it important, we have the cash flow statement. This is where we put on the white gloves and do the real forensic work. This is us following the money trail to find out what really went down.
All right, you ready? Let's open up that first file. Let's call it Exhibit A, the snapshot. This is our foundational piece of evidence. This is our crime scene photo, the balance sheet.
So what exactly is in this snapshot? Well, it's a perfect picture of everything a company owns that has value, we call those assets, and everything it owes to other people, we call those liabilities. But here is the absolute key, the thing you have to burn into your brain. It is for a single point in time. That's why you'll always see a date, like as of December 31st. It's not telling you what happened for the whole year. It's telling you what the company looked like at that one specific second. It's like hitting the pause button on the entire business.
Now, inside this snapshot, there's a clue so fundamental, it's like the law of gravity for accounting. It's this simple equation you see right here. Assets must always equal liabilities plus shareholders' equity. And when I say always, I mean always, to the penny. There are no exceptions. If this equation doesn't balance, it's a massive red flag that something is deeply wrong with the evidence. It's the one rule that absolutely cannot be broken.
So what does that equation actually mean in plain English? Well, it's actually simpler than it sounds. Look at it this way. On one side, you have all the stuff the company owns, its cash, its buildings, its inventory. Those are the assets. And on the other side of the equation, you have how they paid for all that stuff. And there are really only 2 ways to pay for things. Either they borrowed the money, which is debt, or what we call liabilities, or they used money from the owners and all the other investors, which we call shareholders' equity. That's it. Every single desk, every computer, every dollar in the bank account was paid for with either borrowed money or the owner's money. It all has to add up. Okay, so we've got our snapshot. We've dusted for prints on the balance sheet. But, a single photo can be pretty misleading, right? We need context. We need to know what led up to that moment. So now, let's pull up Exhibit B, the security footage, the timeline of events, also known as the income statement. And just like I said, if the balance sheet is a photo, this thing is the video. Notice the wording, over a period of time. This isn't as of a certain date. It's for the year ending or for the quarter ending. It's showing you the action, the company's performance over a whole stretch of time. Its whole purpose is to answer one really, really important question. Over that period, did we make money or did we lose money? That's why you'll often hear people call it the P&L, the profit and loss statement. And the great thing about the income statement is that it tells a story from top to bottom. It's super logical. You start at the very top with the biggest number, revenue. That's every single dollar the company brought in from sales. They call that the top line. Then you just start subtracting all the costs. First, you take out the direct costs of making your product or service to get to gross profit. Then you subtract all the other costs of just being in business, rent, marketing, salaries, and that gives you operating income. And finally, after you pay the government its taxes and the bank its interest, what's left over at the very, very end? That's the big one. That's net income, the legendary bottom line.
All right, we've examined the crime scene photo. We've watched the security tape. We have a suspect, Profit, but it's just circumstantial evidence. Now we need the smoking gun. And for that, we turn to Exhibit C. And I'm going to tell you right now, this is where the best detectives make their name. It is time to follow the money with the cash flow statement.
Now, I need you to listen very closely, because this is probably the single most important lesson in this entire investigation. Ready? Profit is not cash. I'm going to say that again. Profit is not the same as cash. You can have a beautiful income statement showing millions in profit and still go bankrupt next week because you don't have enough actual physical cash to pay your employees. It happens all the time. The income statement has all sorts of accounting rules that can make things look rosy. But the cash flow statement, it doesn't lie. It cuts through the fog and just follows the cold, hard cash.
So how do we track this cash? Well, the statement helpfully breaks down the money trail into 3 distinct paths we can follow. First, you have cash from operations. This is the lifeblood of the company, the money generated from its main day-to-day business. Then you've got cash from investing. This is where money is being spent on things for the future. And finally, cash from financing. This tells us the story of how the company gets money from or gives it back to its owners and lenders.
And as a detective, here's the quick version of what you're looking for. For operations, you want to see a big, positive number. Period. That's the sign of a healthy core business. Now, investing is a little weird. You actually often want to see this be a negative number. Why? Because it means the company is spending money on new equipment, new factories. It's investing in its own growth. So a negative number here is usually a good thing. And financing? Well, that just tells the story. Is money coming in from new loans or new investors? Or is it going out to pay back debt or pay dividends to shareholders? It tells you where the company stands with its financial backers.
Okay, detective. We've looked at the snapshot, we've watched the video, and we've followed the money. We have all the pieces of the puzzle in front of us, but the case isn't solved until we see how they all fit together. The real aha moment, the breakthrough, comes when you realize these 3 documents aren't separate at all. They're constantly talking to each other. They're telling one big, interconnected story.
So let's see exactly how they connect. We'll start with that all-important bottom line from our timeline of events, the income statement. That final profit number, net income, is our key. It's the thread that's going to tie this whole case together.
So where does that net income number go? Well, its first stop is the cash flow statement. If you go look at the cash from operations section, guess what the very first line is? Yep, net income. The statement literally starts with that profit number, and then it makes a whole series of adjustments to turn that on-paper profit into real actual cash. That is the first critical link in the chain.
But it doesn't stop there. That net income has another final job to do. After the company decides if it's going to pay out any of that profit to shareholders as dividends, whatever is left over, the retained earnings, flows directly back onto the balance sheet. It gets added to the shareholders' equity line. And just like that, the loop is closed. The profit you made over the year, on the income statement, gets reconciled to cash on the cash flow statement, and it increases the net worth of the company on the balance sheet. See? It's one beautiful flowing system. Everything connects.
Now that you understand the big picture, every detective needs a couple of go-to tools in their kit for a quick analysis. Think of these as your magnifying glass and your fingerprint kit. First up is the current ratio. It's a super simple calculation. You get the numbers right off the balance sheet. It instantly answers the question, can this company pay its bills for the next year? It's a quick and dirty check for short-term financial health. The second one is the PE ratio, or price to earnings. This one's more about psychology. It takes the company's stock price and compares it to its earnings. It basically asks the question, what does the rest of the world think this company's profit is worth? It's a fantastic pulse check on market sentiment.
So there you have it, the 3 key files, the main clues to look for, and the secret of how they all connect. You now officially have your detective's badge. You know how to look past the surface level numbers and find the story underneath. So the next time you see a financial headline or open up a company's annual report, I want you to ask yourself, are you just going to look at it like some boring old report card? Or are you going to see it for what it really is? A case file packed with clues, just waiting for a sharp detective like you to come along and solve it.